Hey y'all, Jen Hernandez, Loan with Jen. Today we are talking about how to buy a home with low income. So stay tuned. We're going to go over the basic rules of qualifying so that you can be prepared to buy your next home. See you in a minute. Okay, we're back. So, basic rules of how to buy a home with low income. So, don't be deterred if you think that your income is too low. There's so many solutions out there that you might not know about, so make sure that you talk to a lender. Also, like and subscribe our channel. We release 2 videos a week that really help homeowners get to the next level in their research on buying a home. So, the basic rules of how to buy a house with low income are, number 1 is how do we determine income? So the way we do it is we take your gross. We do not take after tax. We give you the benefit of the doubt and we say, okay, your gross income is $2,000 a month before taxes are taken out. Now, when we're qualifying, just a side note, we look at your pay stub and we do not count any bonus or overtime unless you have a 2-year history. So that's super important. So that's why it's good to get with a lender sooner than later, but we use the gross, okay? And we would just use your hourly base unless we can count some overtime, bonus, etc. if we can prove that history, okay? Now,
you need to have 2 years of employment, but not necessarily with the same employer.
In general, so when we're looking at employment, we want to see that you've been employed for 2 years. Changing jobs is okay. If you've been in school, we can just show a diploma or a transcript and you don't have to have the 2-year history. So there are some exceptions to that rule, okay? We can also verify employment in a foreign country if part of your 2-year history is from a foreign country, and we can verify that, okay? Now, the next rule to know is that your housing payment, generally, there are some exceptions, in most cases needs to be somewhere between 40 and 43% of your gross income. So remember, we already calculated how to calculate the income. Then we take that number and you can pretty much estimate 43% is probably a good guess. Now again, I want to remind you there are exceptions. We run everything through this automated system that we're required to do as lenders. All lenders have to do the same automated system. FHA has one system, conventional loans have another system, so the USDA loans have yet another system that we have to run through, and it's subject to the approval in that system. So things like credit, reserves, debt to income ratio, those things can all affect the income that will allow or disallow to be used. Okay, so I just want to make that side note. Now, we went over that your housing payment 40 to 43% just in generic terms. That would be the max monthly payment that you could afford. So let's say that 43% number was $1,000, okay? So that 43% number of $1,000 means that your total payment cannot exceed $1,000. Now let's talk about what goes in your payment. Your payment is a combination of the principal and interest on the loan, the property taxes as a monthly number. So you take the annual property tax, divide it by 12, and that's the property tax. The homeowner's insurance, using the same formula, we take the yearly amount, divide it by 12, and that's what's in your payment. PMI, if there is PMI on the loan, you're likely putting less than 20% down, so you will have PMI on the loan. And then any homeowners association dues, that means the community. There's a lot of communities all throughout the US that have an association fee. So we would take that annual amount, divide it by 12, and that would be a part of that $1,000 max payment in this example, okay? So that's the $1,000 payment. That's what allows us to back into knowing what price house you can likely afford, okay? Now again, there are exceptions. Sometimes we've had clients that have really rock star credit and rock star reserves, lots of money in the bank, and we can get a 45 or 46% debt to income ratio. So be sure to talk to your lender, your local lender, about some exceptions. Okay. Now, the next thing we're going to talk about, and hang in there, I know that this is a long video, but this is how to buy a house with low income. Super important. Sources of income. So we went over how to calculate the income, but what kind of sources? So your job, we have to see, it's got to be a paycheck. Cash does not count. Okay. We can't prove cash. So income from your job counts. If you're self-employed, we just take 2 years average on your tax return of your net income after expenses. The other thing is Social Security disability. We can actually, if your Social Security disability is not taxable, which some people don't have taxable numbers, which is good, we can gross that up 15%. So that's a trick, that's a little secret that we use to get people that to have more qualifying income. The other thing, child support. So yes, child support and alimony you can use. It has to have been received at least 6 months, and it has to have at least a 3-year continuance. So if it's something where the children are older and they're about to turn of age and it's only going to be received for, another 2 years and 10 months, we can't use it. It has to be at least 36 more months of the child support alimony, okay, that's going to be received. IRA and pension. Yes, we can use that as well. Or we can have you set up a monthly distribution through your IRA or pension. If you're, over, I think the age is 57 and a half or whatever the age is that you can access that, we can have you set up a monthly distribution for qualifying. Okay. The last secret for income to qualify is if you meet certain income requirements, below a certain amount of the median income in your area, that you're eligible for the MCC credit. It's a mortgage credit certificate that the federal government allows for has to be a first-time home buyer, and you have to make below a certain amount, depends on the county that you live in. It's around, in my county, it's around $64,000. So that $2,000 a year tax credit, we get to divide that by 12 if you're eligible, and it's $166 that we use towards your qualifying income. Let me tell you guys, that has gotten some of our clients to be able to buy $20,000 more house than they would have normally not been able to buy. It puts them in a completely different neighborhood. So it's really cool to watch that happen. So there's lots of creative ways that we can help you guys with qualifying income to qualify for the house. Now, the next thing we're going to talk about, and again, hang in there, we're going to go over down payment, and then we're going to go over closing costs on how to buy a home with low income. So don't be discouraged. All right, the next thing is down payment. You can use your own funds for down payment. We have to see that it's funds from your earnings, or an asset. Let's say you sold a motorcycle or something. We just have to track it, and it has to be all verifiable. Cash does not count, so if you deposited cash, we cannot count that. But your own funds for down payment, we can verify that. You can also get gift funds from a family member. They must sign a gift letter, and we must verify the transfer. And lastly, you can also take loan from a 401k, either a withdrawal or a loan. You have to talk to the administrator, whoever holds your 401k. You just need to call them and ask them on how to access that money without penalty. So we have lots of clients that do that. Okay, lastly, we're going to go over closing costs. So hang in there with me. We are almost done. Closing costs, you can get closing costs help in several different ways. Your funds, which we went over before, your funds that are deposited from your earnings at your job, or you sell something like a car or motorcycle, we can use those funds as well. Seller credit. So depending on what kind of loan you're getting, if you're getting a conventional loan, you can get a seller credit up to 3% of the price. If you're an FHA loan, you can get a credit up to 6% of the price. So if it's a $100,000 house, you could get up to a $6,000 credit. But be careful, the seller credit and or credit from whether it's the lender, the seller, the realtor, any credits that are coming to you from another party in the transaction cannot exceed that closing costs. So if your closing costs are $6,000 and the credit would be $7,000, you can't get that extra $1,000 towards your down payment. So that's really important to note. Okay. So the next way to get money for closing costs, I mentioned it quickly, was the lender credit. So you can get a seller credit, you can get seller, homeowner, builder credit. or the lender. So the way we do that is, let's say the rate was 3.5%, okay? And you wanted some money to help you with closing costs. In some instances, not all of them, but in some instances, we can raise the rate to, let's say, 4. And we could give you a differential. It depends on your loan amount. We give you a percentage differential to help you pay for closing costs. So it all depends on your loan amount, and it depends on what the rate is. But talk to your local lender about that, about if there's any lender credit available for closing costs. So over a 30-year period, it does not make that much of a difference in your payment, I promise. So have them help you do that calculation. The other way, the final way that you can get your closing costs, and we are almost done and we're gonna wrap this up, is down payment assistance. So every state has different down payment assistance available. So check with your local lender again to make sure that they know, national lenders may not be familiar with down payment assistance in every single state. So if you're living in Texas, a national lender just may not be well versed on that. So make sure that you talk to the local lender about that. So down payment assistance can be a great way to pay for not only closing costs, but down payment as well, okay? So we've gone over a ton. I'm just gonna recap here on how to buy a house with low income. First, we've got to determine your income and what it is and what it isn't. We've got to stick to the debt to income ratios. What's the source of your income that we can use for qualifying? Down payment, how you can get assistance with down payment, and then closing costs, how you can get assistance with closing costs as well. So I hope this was helpful. Please like and subscribe. We release 2 videos a week to help homeowners to the next level, to help them on their purchase. Talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.